Welcome to the Market Huddle with Patrick the Content Machine Ceresna and Kevin the Macro Tourist Muir. So grab a drink, get comfortable, and get ready for a deep dive into the markets. Take it away, guys.
It's November 1st, 2019. I'm Patrick Ceresna.
And I'm Kevin Muir. In this episode, we are joined by Dan Carlson of Tailwinds Research, where he shares his favorite micro-cap stock picks. Afterwards, Patrick and I recap all of our bets for the last year and figure out who's buying steak dinners. For our Tales from the Trading Desk, we remember back to the collapse of Bre-X Minerals.
And then we're going to look back at this week in history when Dow Jones rebalanced the industrial index. And then we're going to end with the top 5 things to watch next week. So, Lena, jump on here and tell us about our beer sponsor this week. Who's our sponsor and what's this all about?
Our sponsor this week is Barrier Brewing's Intellectual Violence India Pale Ale, which is in collaboration with Burial Brewing Company.
Intellectual violence. This is like a conversation with Kevin. In a can.
Kind of like every Friday for me.
Patrick took all week to figure that one out, folks.
Oh, yeah. All right, Lena, tell us about the beer.
So this India Pale Ale is dry hopped with copious amounts of Citra, Simcoe, and Amarillo. That's all it says, really.
Oh, you know what? I like it. I actually like this.
It's 7.8. And it
doesn't 7.8%.
Like it, though.
No, that's the whole point is that like I can get hammered on this shit.
This is really good.
Patrick,
but I will save my rating for later.
No,
that's good. You're disciplined, Lena. I like it. Okay, let me do my legal stuff. Clients and employees of East West Investment Management may hold positions in securities mentioned in this podcast. Nothing in this podcast should be viewed as investment advice. Listeners should consult an investment professional before making any decision regarding topics mentioned in the show. For more information, please visit eastwestfunds.com. Side effects of too much huddle may include water elf disease, an imbalance of the humors, and or maple syrup urine disease. I think that last one is only Canadians get it.
Only Canadians get it. That's like it's genetics. All right.
It's our pleasure right now to welcome Dan Carlson, founder of Tailwinds Research and the lead portfolio manager for DFC Advisory Services. Thanks for being with us today, Dan.
Hey, it's my pleasure, guys. Thanks for having me.
So, Dan, let's start off with what beer are you drinking?
I'm drinking, well, it's a local beer, which you can probably get all over the world these days, Lagunitas IPA.
There you go. Now, are you? Do you have the fires outside? For those who don't know, Dan's actually from California. And are the fires burning outside your door, Dan?
You just wanted to start off with a sore subject, didn't you? So
why don't we save that for the after hours, Al?
Yeah,
let's talk some stocks here.
Yeah.
You're a micro cap stock manager. Why do you focus on those kind of that part of the capital structure?
Well, it's a combination of things. So number one, as my wife would be happy to tell you, my ability to take risk in my portfolio far exceeds the average individual. So I love to get, I love these story stocks for the most part. But what I like about it from an investment perspective is it's an underfollowed area. So the amount of money chasing stocks these days is huge. As you know, there's more capital out there than ever before. But that money is pooled in large pools where they can't even look at a stock that's a 50 or 100 million market cap because they'd have to buy the whole company, and they don't want to do that. So there's the money allocated to this space, especially after all the issues with Bernie Madoff and the problems in 2008. The money allocated on an institutional basis to microcap stocks is pretty much non-existent. So you've got a situation where these companies all need more money, and they're willing to tell their stories and talk to whoever wants to listen. And the number of people listening is minimal, especially from a institutional focus side. So, I can never manage a lot of money in this space, but I hope to, and so far I've been able to, up to the last couple of months, put up some really good numbers by being one of the few players in a space that's exciting yet undiscovered to a large degree.
Yeah. So, Dan, I have a good buddy that it basically concluded the same thing as you. He had traded commodities his whole life, and he kind of thought about where he can get an edge. And he said, if I phone up the CFO of, I don't know, Royal Bank or something like that, they're never going to take my call. But meanwhile, I phone up the CFO of these microcaps, and not only are they willing to take my call, they're talking him, they're giving him information, they're teaching him about his company. And he says, all of a sudden I become important and I can actually gain an edge by doing research, which is for him something that he just looks at as one of the few ways that the individual investor has to outperform these days.
Exactly. There are very few ways to outperform because, as you know, every part of the market is overpicked by large managers, and there's more analysts chasing stocks and bonds, et cetera, than ever before. But one of the neat things about my platform, since I'm also blogging about these companies, is I get information from multiple avenues where, the CEOs and CFOs, if something's happening, they're willing to reach out to me proactively. And at the same time, I have a lot of readers that are in return feeding me ideas and feeding me information on my companies that I didn't even know on my own. So I've tried to create sort of a Dan Carlson version of Seeking Alpha specific to my own portfolio, and it's come together pretty well. It's exciting.
Well, that's great. So why don't you walk us through some of the names that you like best at this time?
All right. So if you skip this next slide, so I just wanted to put this thing in there just to show you that, especially last few months, and this is how the Russell 2000 has underperformed over, basically since sometime in early 2018, and it's creating some amazing opportunities. And this is the Russell 2000, which dwarfs the average market cap of my holdings. So the underperformance for my group is much greater. So if I want to just skip on. And the key to microcap right now is, well, the last slide is the money. Companies that are funded are outperforming, and companies that need money are getting crushed. That's kind of like the bottom line on this space, if you want to sum it up in a nutshell. So then skip to the next slide. And this is a stock I own, and it's fully funded. And they've announced a number of partnerships. They are creating what they call a CHO stopper, and CHO, for those who know biotech, is Chinese hamster ovaries, which is what all your biotech drugs are grown in, is a Chinese hamster ovary vat, which is kind of disgusting to think about.
Okay.
But that's what
Whoa, one second. They grow it in a Chinese hamster ovary?
Well, that's the platform that is used to grow these proteins and molecules that go into.
Does that come with a hamster?
I don't even like to think about it, to be honest.
It's
out there, and these guys have a fungal growth that looks to replace that. It appears that the potential growth rates are much higher. The cost is much lower, and you can really, if this platform takes off, it could dramatically change the cost structure of manufacturing biologics globally.
Okay, so what's the name of this company? So we know the symbol is DYAI. And how do you and where does it trade? I see that you got the .BZ at the end of the symbol. Where is that trade?
That BZ is just a function of my quote service. It trades on NASDAQ. They just uplisted to NASDAQ a few months ago. They were sheets before that. But the point is that this company is fully funded. They got $1.70 a share cash, is bumping along for a long time. And then you see the stock just takes off, and they're light years from revenue, most likely. I mean, they're getting some revenue from partnerships, prepaid funded partnerships, but from any of their products actually being used in the marketplace, it's years away. But if you're fully funded and have a good story, your stock can take off. So that's I just wanted to sort of set the stage of what happens when you have money and a good story. And Dyadic is a good example of that.
Okay. Right. So let's move on to the first 3 ideas for year end of 2019. Yeah,
so I have a portfolio of about 19 companies I follow at this time. Some of them I write on, a couple I don't, for various reasons. Basically, I don't write too much on heavily shorted stocks because it ends up getting the Twitter universe fired up, and I just don't like to deal with that. But what I'm looking for the year-end ideas are companies that have funding in place, have great catalysts, and are being overlooked by the markets, in my opinion. So that's sort of how I selected 3 to talk about today. So if you want to go forward. So the first one, this is a neat company. It's a classic example of a, and I talk about this, about MySpace being public venture capital. So they're really VC companies that are public for whatever reason, and in most cases probably shouldn't be, and would have much higher valuations if they were private. Because the public.
So we're talking about Summit Wireless, WISA.
Right. So Summit went public in late May of last year at $5 a share. Needed more money, had a great story. They were a little delayed on the rollout of their products, which is, standard fare for every company under the sun. But as you can see, the result was that the market penalized them heavily, and they did some more financing at $1.33, and then did some a couple weeks ago at 70 cents. But meanwhile, their products are, doing exceedingly well in terms of development, and they're at this inflection point as a company. But you wouldn't know it by looking at the stock. And this is sort of the opportunities that are there.
So Dan, what exactly do they do? Like, can you explain what their business is?
Love to. So this is a great story. They have created a standard for wireless surround sound audiovisual systems. So if you think about so do you guys have surround sound for your TV?
Yep.
I do, but I haven't got it working properly, to be honest. It's like I'm when it comes to plugging this shit in. But
Patrick,
anyway,
I told you can't use that word. Okay, let's go on. Sorry. Go ahead, Dan.
Yeah. Kevin, do you have it?
Yes, I do.
Right. So what you'll find if you're talking to portfolio managers and people on Wall Street, they all have the money. They've got their TV room wired and speaker wires through the wall, going to an amplifier that connects to the TV, right?
Right.
The rest of the world, which would be like the 99% of the world that wants to watch a Super Bowl and doesn't have the money to wire up their walls, is using a TV and in some cases a sound bar or something to try and improve the quality. But everybody knows the future of audio is wireless. Look at how Sonos is doing, right? So WISA is a standard that's being adopted by speaker manufacturers to create very simple to install surround sound. So basically, if you walk into Best Buy, and this is as of this week, you can go into a Best Buy store in the US, buy an LG TV, and buy a Klipsch surround sound system. And all you do to connect the Klipsch surround sound to TV is you plug a little dongle into your TV and you plug the speakers into the outlets. Boom, your system's set up. So the simplicity, this will work really well for you if you're having trouble setting up your system. The simplicity is amazing.
Yeah.
But what makes it better than anything else out there is on the technology side, which is kind of hidden under the covers, but it's better than wireless or wired. It actually has less lag because it's wireless than you have using your amplifier. It's much better than running through a home Wi-Fi system or through a Bluetooth system in terms of the lag. So you've got the best sounding surround sound system out there with also the simplest installation. And what Summit does is they've created a standard. They sell the send and receive chips that get installed in the speakers. So Klipsch, you've probably heard of them, Harman Kardon, Bang & Olufsen, these companies all have products that use this system currently in the market, but it's very nascent. They're just now rolling it out. LG is the first TV company to support the standard, and you're going to see that change over the next 12 months, where you're going to see a lot of TV manufacturers supporting the standard. So you're at this total inflection point. Like I say, I went into Best Buy stores last week. There's the picture of the display in a Best Buy store right there. As you can see, Klipsch is the speaker company, and they're promoting the WISA standard. And
so the Summit Wireless has their own standard that's being adopted. Like, so does that make them somewhat competitor proof? Like, where are the risks to this story?
So let me tell you a standard that you use all the time. Bluetooth, right? So every Bluetooth device connects to every other Bluetooth device. And most people don't know this. Qualcomm owns Bluetooth. So that's what WISA is trying to do with surround sound. The risk is quite simple, that the standard doesn't get adopted, that people decide there's a different way of doing it. But the good news is every review you read says that this is the best thing out there. And if you look at the rate of adoption by speaker manufacturers and TVs, it's accelerating rapidly. So, my estimation is this thing takes off.
And so, are they fully funded for till when? When's the next unfortunate? You hope always that every financing is done at a higher price and not a lower price. But how long before they need some money again? Yeah,
so they're going to need money at some point towards the end of the first half of next year, right? Sometime in Q2. But so that's where this one. That's why this story has been pummeled. But at some valuation, you can look through dilution, in my mind. And when you've got a stock that's trading at a 13 million market cap and the invested capital in the technology is like 80 million, and it's working and rolling out, I kind of just look at it and go, I don't care if you dilute me. I'm going to make some money here.
I got it. Right. That's a good story. Okay, let's go on to the next story. Anixa Biosciences. Did I say that right? ANIX.
Yep, Anixa. Right.
Anixa.
So this was my top pick for the year, and as you can see, it's done absolutely nothing for me. It's I think exactly flat for the year. So Kev, can I switch topics for 1 second?
Sure.
I have this friend, Sriram Paravemba, who's in the display industry, and he told me this rule of thumb he has, and I call it Shri's Law. And that's you take every timeline a management team gives you and multiply it by pi, and it's usually accurate. So
it's kind of like there's one of those rules for when you work with contractors on your house.
Exactly. Yeah. And you can budget and multiply by pi as well, unfortunately.
That's funny.
So Anixa was my top pick coming into the year, and I love the story. It's one of my largest holdings. And it's, the timelines have been pushed to the point where, eventually, if you keep getting halfway to the end zone, you're going to get there eventually. You're one atom apart, right? They have major catalysts that have all been sort of pushed into Q4, but all are going to come together. And that's why, and this company has money. They don't need any money now. And so if you skip to the next slide, would you?
Yeah.
Yeah, so these are the catalysts they have coming up, and slide catalyst number 2. I have a picture of Angelina Jolie there because they're filing an IND, which is a new, it's the right to go start testing in humans, basically, with the FDA. They're filing that in Q4 for a breast cancer vaccine, and it's specifically for the kind of breast cancer that Angelina Jolie had an operation to prevent. So. As you know, there's a number of women out there that are genetically predisposed to getting cancer. These guys have licensed a vaccine from the Cleveland Clinic that in mice trials has shown 100% efficacy of preventing that kind of cancer.
Right.
And so
and what's the market missing? Why is the market not care? Is it again a case of it just being too small for anyone to care about?
So this one is it's a couple things. Number one, their model is unique for the biotech industry. So typical biotechs raise 20 million, 50 million, 100 million, hire a bunch of doctors, build a lab, spend all that money, hopefully hit some catalysts along the way, and then raise more money, right? I'm sure you've seen that a lot. It's a very capital-intensive business. And this CEO, who by the way is Harvard and Stanford background, he's on the board of the American Cancer Society. He is probably the smartest CEO I deal with, and definitely one of the rock stars out there for the microcap space. He's awesome. His model is quite simple. I'm going to work with partners who have labs and have budgets, and I'm going to let them develop my products for me under a partnership. So that's what he's doing. It's like this breast cancer vaccine was licensed from the Cleveland Clinic. it's got a Department of Defense grant. And that's another little interesting tip with it. Department of Defense grants more cancer research money than anybody else in the world.
Why is that?
It's an odd thing that the government created to have the DoD spend money basically on breast cancer initially I don't exactly know why. I think it has something to do with the fact that they need to spend more money women related for healthcare.
Oh, okay.
It's a weird thing, but they spend hundreds of millions a year in grants. So they granted these guys around $8 million to do their phase 1 trials. So you got a potential breast cancer vaccine that has had excellent animal results and is fully funded through phase 1. If it works, it's worth billions of dollars, and you're going to find out at least the safety data for free on the government's dime. So that's a good deal.
Yeah.
But that model of not raising money, not telling your story to institutional investors, but instead going out and saying, hey, we're going to do this with somebody else on the cheap because other people are spending their time and money and they have their doctors doing it and their labs doing it, doesn't resonate too well, believe it or not, with Wall Street. I mean, it resonates with me. I don't mind them saving money, right? But
that's right. When there's no corporate finance fees, the Wall Street analysts somehow conveniently skip that stock.
Exactly, and if a big healthcare fund can't put $20 million into the stock, they're not going to tell their friends about it. Just not going to get the publicity.
So is it one of those things that you actually think that it's could be 1,000-bagger if it works?
Right. So the first. If you go back a slide, if you're on the wrong stock there. Yeah. So the first one is a CAR T therapy. Are you familiar with CAR T at all?
Nope.
So you're familiar with Kite Pharmaceuticals? Got bought by Gilead for $12 billion, and then Juno got bought for $8 billion, I think. So they developed CAR T therapies. So if this is too deep in the weeds, let me know. But there's two kinds of cancers really. There's solid tumors and liquid tumors, right?
Yeah.
And
why don't you just? Yeah. So this is probably too deep in the weeds for me. You're already kind of confusing me. But what do you think? Like, where do you see it going if it works?
I'm glad you cut me off. So okay. if the CAR T therapy works, they're going after solid tumors. Kite went after liquid tumors and got bought for $12 billion. Juno went after liquid, bought for $8 billion. There's a number of players who are successful in CAR T for liquid tumors. There's been zero success for CAR T in solid tumors, which is twice the market size. They think they're a platform. So, I mean, I don't want to, get over my skis, but it's worth tens of billions if it's efficacious in multiple forms of solid tumor.
And what is its current market cap?
It's $20 million. So you almost view it as just like a cheap call option. Chances are it's not going to work, but if it does, it's like a huge multi-thousand bagger.
Yeah, I mean, it's a $100 million market cap now.
It's 100. I got my digits wrong. I'll just look here.
Or it's 80, actually. I think.
Oh, it's 80. Yeah, sorry. You're right. I was looking at the shares outstanding. I blew that. Yeah.
It's amazing to me. I believe that this thing stands a pretty darn good chance of being successful. Insiders have been buying stock consistently. And then in a very telling signal, the head of CAR T for Novartis, which is the biggest CAR T investment firm in the world, you know who they are, right? He just joined the scientific advisory board this week.
Ah, there you go. Okay, well, let's get to the last one. Harrow, HROW.
Right, and I got a picture on the next slide just for you, Kevin.
Okay, that's the Turtles.
Who's your favorite money manager of all time?
Well, my favorite is no, it's not Richard Dennis with his Turtles though. I like him, but I'm actually more of a Druckenmiller / Soros guy.
Okay.
But anyways, but I do know the Turtle story, and I think it's pretty awesome.
Okay, so Harrow's a neat story. They do compounded drugs, but they also take a number of their compounds and spin them off into little startups, which are what I'm calling turtles because I don't know what else to call them, and then they spin those off into separate companies. So they've already launched one IPO of a subsidiary. They've got one that was invested in by a private equity fund, and they've got 4 more in the pipeline. So spinning off sub companies that all seem to have potentially large market caps, and the model works. Meanwhile, they're profitable on their own, and they're throwing in cash.
Wow.
Yeah. And the neat story about this is if you look at those two big red drawdowns in September or August, this is what's great about the world these days. And they closed down one little division, and the analysts, one of the publishing analysts backed the numbers out of their model, but they lost like $6 million in revenue from the part they closed down. But he also backed $6 million out of EBITDA as an accident in his model. And he published the model, didn't catch it. The stock got hammered on a flaw in his model, which he corrected 2 days later. But that's the way it is. Black boxes dominate, right? So the black boxes saw the numbers getting slashed, and they sold the crap out of the stock, and then it reset at a lower valuation. So you're getting at $5 a share what was trading at $7.50 just prior to an analyst flaw that has subsequently been corrected, which I think is a statement about our capital markets to some degree.
Fair enough. So, Dan, I'm going to pull it in and say that we're going to say goodbye at this point. But just I wanted to remind viewers or listeners that they can stick around for the after hours. We're going to learn about how bad the forest fires are raging near Dan's house, and also learn more about all the different picks. But in the meantime, could you tell us a little more where people can find you and where they can sign up for your research?
Right. So at my website, which is Tailwinds with an S, tailwindsresearch.com, I put all my articles up there, and all the articles are free to read, and all you got to do is click on one, and it'll ask you to sign up. And I don't spam anyone. I'm like you, Kevin. I treat my readers well. I don't sell their names out to the world. And you'll also get an invite to get the weekly newsletter that I put out every Sunday. And you sign up for that, and that's how you get all my stuff.
Terrific. Well, thanks again for joining us, and make sure everyone sticks around. We'll learn more about Dan in the after hours.
Let's move on. So, Kev, before we get into our regular parts of the show, while we're starting off with these beers, we should, not starting off, but while we're continuing on with these beers, we should get into keeping score. Now, why is it that we chose to have an episode about just our past bets? Because it is episode 52.
I know. I can't believe I lasted this long with you, Patrick.
Yeah, absolutely. And so I don't know if any of our listeners can connect the dots as to how many weeks there are in a year, but this is the week prior to our 1 year anniversary for the show.
So I have a full mea culpa. I thought this was the actual anniversary. Mm-hmm. So I'm not very smart.
I'm not surprised.
And
but at least you remembered.
Yeah, at least I remembered. And my wife, I was telling my wife, and she asked if I was going to buy you something to celebrate, like a ring or something.
I do like silver.
Yeah, whatever. Anyways, it's a good thing I don't do anything with dates or numbers for a living, because it's not that important.
It's not that important.
But we decided to go and take this opportunity before our 1 year anniversary, which is next week, to review
all of the bets
bets
we've made throughout the year. Now, there were a couple extra ones that were already settled and stuff. So we just wanted to highlight some of the core ones that are still either have just been settled and or are going to be settled shortly. And we just want to keep this going. So going back to one of our very first episode, it was November 9th of 2018, a year ago. You came up with this little chart show that you put on about all of these midterm elections and the 18 months that follow. So we were making a Duke and Duke wager.
I think it was actually the 12 months, but that's fine. It was the 12 months after the midterm elections, and it was a Duke and Duke wager, because all of those over the last 40 years or 50 years, they've all been positive.
Right.
And you, Patrick, were bearish for change.
I was bearish, but you know what? We did have a October to December market crash that wiped out 20% of the market, dude.
Yeah, but that wasn't the idea. Was whether we were going to be 12 months from now higher or lower.
Okay, yeah.
And I said higher, and you said lower.
Yeah, right.
And you're wrong.
Okay,
so
I am going to
one
give
up for
you.
Kev.
I am going to give you one And the best part is what many of our listeners may or may not know is in Canada we don't have dollar bills. We have loonies.
That's right.
But because I was in the States just now, I came back with a wallet full of dollar bills. And so
well,
for the
what were you
Duke and
doing that
Duke,
you needed dollar bills for, Patrick? Okay.
no idea.
So yeah,
but
so
I'm going to give you a Duke and Duke special dollar bill when I see you next week, okay?
Well, we got to wait for the 12. Oh, no, actually, I won that one. Okay, fair enough. That's awfully kind of you.
Yeah. So you can
this
see
is the chart, just so you can see the fact that it's been nothing but up apart from that 2 months when Patrick was right. But the other 10 we're all up. Okay, next bet.
So December 8th. Well, December 8th, which was a month afterwards, we threw the gloves down about the fact that I was a bond bull and you were not a bond bull, let's call it. You were.
That's right.
We won't call you a bear, but you were.
No, you can. I was bearish and wrong, but the thing was that I said if you're going to be
you said
right,
the home builders. Yeah.
I said if you're going to be right about the bond market rallying so hard and the yields going down, I said that a better place to be is in the home builders because they're going to outperform.
Right.
And you said you
and
called
so
BS
our wager,
on that one.
Yeah. So so the wager was this Christmas dinner coming up in a month and a half's time. When we get together for an annual Christmas dinner, that somebody's on the hook for steaks.
Yeah, it's a big one. It's a big one.
The year's not over, but
yeah,
I'm not,
so I don't want to go.
But I'm not looking good right now.
Let's pull up the chart here.
Yeah, so you can see here on this chart, while I'm ahead, being up 20+% on bonds, like we should have vol adjusted this. Right, but I chose not to, which is my error, because if we were vol adjusting, then I probably could be beating you.
Well,
but
it might have been closer at the very least.
It would at a minimum would have been closer.
And as it is now, it doesn't look very close.
I am up 20% plus on the bonds, but you are up a staggering. I'll let you say the number.
43%.
That's right.
Yeah. No, the home builder's been a great place to be.
It's been
you know what? It just when you laughed at me, it just made me feel all the better. I told you, the more that I get laughed at, the better I feel. Let's go on to the next bet.
You know what? I'll use all my TLT profits to buy you a steak, dude.
Nice, I like it.
Right,
okay.
You know, like that's. I'll find a way to live.
Okay, well here
all
it was. Right, so I overstayed my welcome on the Bond Bear camp.
Right. So on March 7th of this year, we had a bet about 10-year Treasury yields, and you suspected that we would never see yields below 2% again.
Yeah, that was pretty stupid.
Yeah. You get
no other way around it. No other way around it. I was completely wrong.
You were spectacularly wrong.
I agree. Completely
and
agree.
I am so disappointed that all I get out of this is a fucking dollar.
Yeah, I know.
Duke and Duke.
I give you back your Duke, your dollar that you give me.
No, there's no such thing as give backs. We don't neutral out. I'm going to give you a dollar. You have to.
Well, do you know what? I'm going to do the ARB. I'm giving you a loonie. I only bet you a loonie. I'm taking the 32 cents for myself. Let's show the chart to show how wrong I was.
Yeah,
really
spectacularly
wrong. 2% gave away like an old lawn chair that's been out in the sun too long. It's really bad. It was ugly. Listen, it was the August.
You know what's funny about your little example is that exactly happened to me when I was in Florida just now a couple of weeks ago. I have a picture. I'm gonna have to find a way to share it afterwards, but. I sat down in the resort in the chair and it just gave out. It gave out like the 2% level on interest rates.
Well, there you go.
It's just my ass went right through the chair. It was awesome. All right,
it had nothing to do with the fact that you've been drinking too much and put on some weight. Okay, let's go to the next one.
So April 19th, it was on my birthday in earlier in the year. And this is setting up to being a wonderful birthday present.
Yeah, this was a terrible bet on my part.
Yeah, so we bet on whether inflation will average more or less than 1.9% for the remainder of 2019. And what I love is the wager was perfect. Yeah. Because it was picking up the tab for a night of beer drinking with me and 5 Market Huddler listeners. And by the way, all of our
one of them's already spoken for.
Yeah.
Right?
But so yes.
It's what you know what he's going to be upset with me. I've forgotten his name, but the fellow from Detroit.
Yeah,
he's already
Devin.
He's
Devin.
Oh, there you go. You're a much better friend than me. You remember his name, but anyways, he's already spoken. We're going to be down to 4. I'm going to lose this one. All I can say is it's just like it was your birthday. I'm glad I gave you something that was worth it. It's kind of like how Mrs. Big Picture Trading does something for you once every time on your birthday too. So that's it. That's the only one you're going to win. That's going to be a decent one. Yeah, I've lost it. It doesn't look good.
So any of our listeners that want to be a part of this, the 4 remaining spots for Market Huddle listeners to drink with us, reach out to us by email.
Yeah, but whoa, you got to tell us why you want to be a part of it.
Yes.
It's not good enough. You got to tell us why.
Let us know if we have more than if more than 4 people have send us emails, we'll have to put you into a little bit of a lottery.
No, we're not going to do that. We're going to pick 4 based upon the answers.
There you go. Why you deserve to be there.
Yeah, well,
let us know.
Hoping that maybe it's just us, you, me, and Devin, maybe. Going to take you to like Loblaws and buy you some beers.
May 4th, a couple weeks later.
Oh God,
we asked this one. We asked a simple question: what is the next Fed move? Is it a rate cut or is it a rate hike? What did you say, Kevin?
I said hike, but listen. To be fair to me.
God.
It was a ballsy play because it was like very few people thought that. And it was at the time it was leaning that way. It was me and Scott Minard from Guggenheim. And we were, again, spectacularly wrong. The only thing about this was a burger bet. I've already settled it up. I have made good on my my wager. This has already been settled. It almost shouldn't have been included because I've already paid up.
All right. But you know what? I just needed to make it look like I won more often than lost.
Yeah, I know.
So I had to keep it in there. Anyway, so June 8th. On June 8th, we made a bet. Will the market make a new highs for the year later this year?
Whoa, 1 second. And for our listeners, guess who picked which way? Big shock. Patrick was bearish.
Big shock, eh?
Yeah.
So, I was bearish and I was wrong. Kev. The market continued to make higher highs, even though recently I've been more bullish than
I know.
you.
Do you know what? Actually, I did want to say something nice about that. I don't know. I'll pick another time when I'm feeling more nice about it to actually say something. But you have gotten it right lately on that, and you've been actually more right than me on the stock market recently.
So, nonetheless. This is a shut your mouth burger bet. I don't understand. I guess we must have said something online because that was what Devin basically wrote in there. So we must have this must have been an aggressive burger bet.
It must have been. I already settled it up. It was
this is me. I owe you the burger. I haven't settled up.
Oh, that's right. Okay, and do you know what, Patrick? I got
found
new place.
The burger joint, right?
I found a new burger joint.
Which one is
for
it?
those
Let's give them a shout
from
out.
Toronto? I will give it a shout out. It's the Museum Tavern, and I went there today because I like my burgers, and to kind of scout it out, and it's awesome. The Museum Tavern on Bloor, across from the museum. We're gonna go. You're gonna take it. It's a great burger. I'm looking forward to it. I'm gonna have many beers while I do it. I'm gonna include beers on my burger.
All right. Done deal. All right. So here was the chart, and it keeps plugging away. So now, on July 12th in the summer. We bet on Deutsche Bank, higher or lower first touch. What is it? First go to 5 before 10 or 10 before 5. And this was a steak dinner. And this is a live and active bet. that is no closer to resolution.
Yeah, we're back at 7.5, aren't we?
We're literally back at 7.5. We're right in the dead center, and one of us is going to be spectacularly wrong. And we don't know. We're literally right in the middle. And so this is one we're going to keep tracking. This is an open-ended bet.
Yeah. Someone's going to win this. There is a steak dinner happening on this one.
Yes. I'm going to win it, and I'm going to go Wagyu on your candy ass.
There we go. Okay. The market gods are going to punish you for that. Like you're talking trash, and that's not good. But anyways, let's go. August 2nd,
you're going to hold me to that. August 2nd, we did the British pound versus the US dollar first touch. It was a burger bet. Does the pound go to 115 before it goes to 129 or 129 before it goes to 115? And you nailed this one, dude. Congratulations. Yeah. Take a bow for your spectacular market call.
Actually, I just realized, well, that's very kind of you. I do have all sorts of bad ones, so don't worry about that. But I do realize now that I am 2 burgers as a credit here.
Yes.
So I'm going to have to find another burger joint. I'm wondering if I should just put them together and make a steak. Anyway.
No, you can't do that.
Okay.
You can't do that.
Okay, let's go. What's our is that our last one?
No, that was that. No, the recent one just from the last month.
This is actually, you know what, Patrick? This is the one I'm worried about. This is
you are worried about this.
This is it because it's the stakes have never been higher.
The stakes have never been higher. So back on October 11th, it was the U.S. dollar versus the Japanese yen. First touch to 112 or 104. And this is the wager of whoever loses. Should be actually the winner gets the opportunity, not the loser. But we are doing it. The loser has to put on the attire for the Market Huddle menswear.
That's right. And the Market Huddle menswear is obviously the shorts with the dress pants. I mean, with the dress shoes, with the dress socks, and a short sleeve shirt
up to the knees,
and a short sleeve shirt with a tie.
Right.
Basically, what you find in a Sears catalog from 1975.
And it will be the cover of the episode when the losses.
That's good.
Occur.
I like that. And maybe if it happens before our drinking night, just when I have.
Oh, now you're really pushing it.
We could do it then. We'll see if it happens before then.
Yeah.
Anyways, those are some good bets. I like it,
that's good bets. So we have. Yeah. I owe you a couple burgers, but I've cashed in a bit. I've got definitely some dollar bills coming my way. But
you got one. You got a loonie. You got one. Isn't it? Do you
something like no, it's true. It's
maybe
true.
It's 2. I can't.
I'm. This intellectual violence has got me really worked up.
Okay. Yeah. Well, I could hear you. Anyways, let's go on. This week in trading history, what do you got for us, Patrick? Oh, by the way, just before we go any further, Patrick, I missed you last week, and it was never more obvious than when I stumbled through this week in trading history.
Didn't you say trillion instead of a billion by accident?
You know what? You have to work the slides. You have to try to work things. It's just like your job's harder than it looks. Like I kind of thought, it's Patrick. How tough can it be? But when you're not there, it's like all of a sudden I'm thinking about a million things. I got to keep the show going. It's hard. So. No. I have to give you credit for this.
So hard.
And but thank God Cuppy saved me. He had a good story to take me out of my
misery,
terrible thing. And you know what the funniest part about it is when
spiral.
you said how bad could it have been when I told you how bad I did, and he said you said all you have to do is read Wikipedia. So why don't you do your job at reading Wikipedia for everybody?
I am not reading off of Wikipedia, but you should have. That would have helped you out in a big way last week.
Okay.
All right. So this week in trading history, I wanted to go back to November 1st, 1999. Look, we could talk about bear markets and other things like that, and there's no shortage of analysts that are trying to say that there's a lot of similarities or echoes to 99 to present, like particularly the way that the recession played out in 2001. But anyway, that's not what this history is about. It was on November 1st of 1999 when the Dow Jones Company, who puts together the Dow Jones Industrial Index, rejiggled their asset mix in terms of what composes of the 30 companies that make up the industrial index. And back then, they added the technology components to give the industrial index a facelift for what is the new paradigm. And they added Microsoft, which was one of the darlings during the 99 run. They added Intel, which was certainly a massive darling. They added SBC Communications, which later rebranded as AT&T because that was their parent company, and they just kind of had changed up the name a bit, and they added Home Depot. And at the same time, they dropped legacy industrials, right? Like Sears Roebuck was on the Dow for 75 consecutive years. Union Carbide, which was dropped, was 71 years on the index. Chevron and Goodyear both were on the index for 69 years. So you're talking about core industrial companies that were on that index, and they were intentionally dropped to put the tech companies on. And would you not know it that the Dow Jones, within months, marked its peak and began wiping out like 40% of its value in the subsequent 2 years?
It's as old as time, Patrick.
Yeah.
When they
it's like a magazine cover. It's like a magazine cover.
It's like when it finally goes into the index, you should be selling it.
Yeah.
You know, like that's the kind of, especially this one where this is actually based, the Dow Jones is chosen by humans as opposed to by a calculation. Like the S&P is actually just market cap and whatever it is that, you know, when it gets a certain market cap, it gets audited automatically. The Dow Jones is humans' choice about what they think best represents the market.
Yes.
And the fact that they were doing this at the top is just
it's epic.
It's a beauty. It's a beauty. Like that's
it is a testament to doing the reverse because like the moment think of the pressure that was on that team of people that they're seeing all of these stocks running, right? Like during that run, we're going to talk about it in future history sessions when like Nortel and BCE were like 30% of the index and all these other things, the Canadian index. They were just, it was just a period where if you didn't own these stocks, you didn't have performance. And the pressure on the team that decides what goes into this mix, it was just enormous because the industrials would be lagging in a big way because they simply didn't have the exposure to the stocks that were running, right?
Right.
And so the pressure on them to include them, there's a breaking point, which is that it's the WeWork moment, right? It's
yeah. If you know what's interesting, it probably was also coincided with the time the Stanley Druckenmiller, you know, chased the tech stocks in the final kind of throes of that .com bubble.
Right. Well, what is interesting here, and it's not evident on this chart we're showing of Dow Jones, is actually from November to I think it was March of 2000 was when the NASDAQ went from 3,000 to 5,000, right?
Yeah,
like,
it was just epic. It was nuts. It was doubling every day.
The S&P and the Dow did not participate. It was a NASDAQ only run. And during those 4 months, the NASDAQ, freaking 3,000 to 5,000 in 4 months.
And that's the famous Jim Rogers, I think it's Jim Rogers line, or at least that Jim Rogers talks about in Market Wizards, the fact that often the last kind of 50% of the move in the bull market occurs in the last 10 or 5% of time. Right. Meaning that it accelerates at the end. And that's interesting. Like that's back to the idea that maybe, you know, in our current environment, maybe things get even stupider before they finally kind of reach the point of,
you know Martin Armstrong keeps talking about that, or Armstrong economics. Like he was always of the opinion that like the Dow would rip to 40,000 and some parabolic blow off that would end it all. And we've made fun. Well, that was Harry Dent.
Oh, was it Harry Dent? That's right. I'm sorry.
Yeah, but it's all the same narrative, right? Yeah. Which is that it's that fifth wave of the kind of Elliott wave count, the parabolic blow off that happens at the tail end. But it's interesting is that back in '99, it was only a component of the stock market that did that. And it wasn't the S&P and Dow that blew off. It was just the NASDAQ. And this is the same thing. Is like if you think it's the Dow Jones Industrial that'll blow off, it may not be. It may be derivative markets within.
Yeah, it might not even be a listed market. It might be private equity.
Yeah,
like, who knows?
You are absolutely right. Private equity. You sent me that video that was just anyway. It's
they
crazy.
can't say that. You have to tell everyone the video I sent you. I sent you the Compound, which is Barry Ritholtz and Josh Brown's thing, and they interviewed the guy from Verdad. And you know what?
Yeah.
We'll put it in the show notes, and it's a terrific 15 minutes of that you got to watch because it's just
just shitting on private equity.
Well,
awesome.
yeah, we got to. Patrick's like, how do I short private equity? That's all he's after seeing it. He's like, how do I short this? Okay, well, anyways, that's a great market history. Thanks for sharing that with us.
So
today,
so Kev, let's move on to Tales from the Trading Desk and wanted to go. Now, I was at the Silver and Gold Summit out in San Francisco over the past weekend, and obviously involved with a whole series of these mining companies that are trying to raise capital and draw investor interest. Many of them are micro caps because the mining space is just so brutally underfunded. But you have a story to tell about a little bit of history. It's a little history with a little bit of a story.
Yeah. So for those who don't know, the Bre-X story in Canada is a very famous mining hoax. And it was actually a mine in Indonesia that had actually been previously mined by some Australians. And then this small little company called Bre-X decided to go and mine it. And
I do want to make a note. Bre-X was one of my for early investments, and I still had the certificates on my wall.
Well, actually, I'll give you a little note about that too in a second. But so it was this stock that all of a sudden, even though the Australians were there and that they had found no gold, the Canadians went with this little company called Bre-X that was listed on the Alberta Stock Exchange, and they, lo and behold, found gold. And not only that, they found a lot of gold. And this market cap on this stock took off. And it was something that was unbelievable. I think it was one of the biggest gold mines in Canada in terms of the companies, and it caught the attention of many international investors. I think at one point there was even Placer Dome and American Barrick were trying to bid for each other for it against it because they were trying to take it out. And one of the things, though, is when a company bids, there's often some due diligence. So I believe at the time they were trying to get, Bre-X was trying to get them to go hostile, because when you go hostile, often you drop the condition of the due diligence. But anyways, the reason I'm bringing this up is that one of the architects of this story, let's say, I guess we can call it a hoax, was the geologist John Felderhoff, and he recently died this week. And when I heard this news, I said, "Oh, you know what? We got to talk a little bit about Bre-X. We never talk about this story." And so, first of all, you know, my father was in the investment industry, and I remember him telling me beforehand that before it hit the wires that the geologist had been pushed out of the helicopter.
Yes.
Because remember, there was one geologist that fell out of the helicopter.
Yes.
And we heard this, and he's like, "Oh, I didn't short it, right?" And that was the problem, because I just didn't kind of put two and two together quickly enough. But very quickly after the news broke that this geologist had fallen out of the helicopter, it started to kind of leak out that this might be a fraud, and there was all sorts of problems on the way, that there was a takeover at the time occurring. So some people were doing risk arb, some people were, buying it because it was cheap again. And meanwhile, the stock's going from, I can't remember, $30 down to like 10, down to like 5. And don't forget, this is like the greatest kind of gold find that they've had since Hemlo, off the Trans-Canada Highway. Anyways, I just remember the one story that I want to tell is that at one point when it was still trading and we weren't sure if it was a fraud, but lots of people thought it might be a fraud, there used to be two exchanges in Canada. There used to be the Montreal Stock Exchange and the Toronto Stock Exchange. And it was a real pain in the butt, because oftentimes the Montreal, nobody would trade on there, and then you would get situations where you might trade through that market. And don't forget, this wasn't in the day and age of very quickly kind of having machines to do this automatically. So sometimes what you would have is you would have to honor a quote there in Montreal and fill somebody because you had missed an order in Montreal. Anyways, the point of it is that at one point, sometimes the two exchanges didn't coordinate their openings. So one time when Bre-X had issued some bad news, and it was looking increasingly like that it was becoming more obvious that it was a fraud, they were letting it trade in Montreal, but they were taking their time to open it in Toronto. So one of the, I worked at a bank, and we had a lot of proprietary trading desk, and one of the traders went, and he went and listen, this is way back when. I didn't do this, but this is pretty funny. He knew that the Toronto wasn't going to open till another 15 minutes, but in the meantime, they were letting Montreal trade. So he would go in and he bid for 5 million Bre-X, to keep the thing higher so that it looked like it was going to open to somewhere. Meanwhile, in Montreal, he's selling everything he can find.
Wow.
So then what happens is, gets closer to the time Toronto's going to open, he kills his bid, and then just has the thing open down $4 or $5.
And you could go to jail for that nowadays.
I don't know, but it's pretty funny when he did it. I know I shouldn't be laughing about it, but who were the idiots that were buying it in Montreal? Anyways, you probably could. I didn't do it. I'm sure that this was just something in my imagination and didn't really occur.
Yeah.
But
and it definitely wasn't you.
No,
it
actually,
was
it really
somebody
wasn't.
else. It was
It really
somebody
wasn't.
I know.
Actually,
it's somebody
that's not
I
true.
know.
Do you know what,
and
Patrick? I kind of think this was kind of funny, and that I would step up and say, yeah, I would do it, and I wouldn't tell the story if it wasn't me. But anyways, I wouldn't tell the story if it was me. Freudian slip. No, it wasn't me.
Exactly. Yeah. It wasn't you.
Anyways, the long and short of it is, it just kind of shows you how inefficient markets were back then, and what kind of the shit the guys did, right?
Nowadays, with all the electronic arbing that happens, it's there's the efficiencies are all of that.
Yeah.
That gap has been closed, right?
Well,
Like
and it was
back
just
then,
pretty
you could
funny.
make a
It was also a
living
funny time because the fact that people actually wanted to believe badly enough. My favorite story is my old boss. When we were laughing about it after the fact, he says, let's just think about what happened in terms of this was supposed to be one of the most kind of rich mines that we'd ever seen in terms of the actual amount of gold there.
Yeah.
So when they were salting the core, which is they aren't putting extra gold in there, right? You could just see them after being at the bar for a little bit too much time, right? Because they have to go at night, break into the thing at night to salt the core. And he says, can you imagine them sprinkling some on? And they're like, oh, you put too much. Oh shit, let's just go with it. Because it was literally going to be one of the best gold mines that has ever existed if it had occurred. In hindsight, it was so obvious it was a fraud, but somehow everyone seemed to be caught up in it. I was a derivatives trader. I wasn't really focusing on the story. But actually, one last story I'll leave you with. So the geologist that was pushed out of the airplane, I was, everyone said that he got killed and that they could never find the body. Because it's in Indonesia and it was in the mountains or whatever. I don't know. It's whatever. Supposedly, it's well known in the kind of mining community that if you go at certain spots, that he hangs out and he's fully alive and everybody knows it.
Really?
Yeah. I can't remember Guzman or something like that. It was I can't remember the guy's name. Guzman. Yeah. People they're oh yeah, I've seen Guzman at the bar.
There's not a lot of people that are willing to talk about that story anymore.
Yeah. Well. It's pretty funny.
Not anymore, ever. There's the people that know it, they don't want to talk about it. And it's anyway. Thanks for sharing.
It was a funny time. It was a funny time. It was a good story.
No, you know what? I have my shares on the wall because I got burned on it because I was a fool.
because you were long. So I have one last story to tell you about this. So at the time, I was the equity derivatives trader at the bank, and so we would go do all the rebalancings for the actual the tips and hips trust, which are the SPY equivalent, right? Mm-hmm. And I used to get into kind of disputes with the regulators because at the time there was no market on close. And they sometimes accused me of like taking a stock and pushing it up too much at the bell when they were going into the index, or pushing it down too much when it was coming out of the index. And I used to argue with them all the time. I go, listen, this isn't as easy as you think. Like, there's the guys hunting me the other way. You can lose. So although, I'm making money this time, I could lose another time. Well, with the BREX, what happened was it was part of the index, and they halted it, and then they took it off the exchange, but they halted it at $1. So we owned all the shares that were part of the index at $1 and then couldn't sell them. They basically went worthless. But because the last trade was $1, we got stuck with them. So here I was stuck with them. So I remember I phoned up the regulator and go, here, look, like I just lost. I can't remember what it was. Like it was like, it had an extra comment. It was a fairly big number. But, so I said, here, I've lost this much money. So this is the case where it doesn't always work. But the thing is, I took out and I went out and I rushed and bought. I sent it down to the transfer agent, and I made as many certificates as I could.
Really?
For the whole desk. So I went around on the desk and I gave everybody a certificate. I go, here you go. So, and I still have one that's framed. So nice. I have my BREX certificate and stuff like. So you have yours because you held it on, like you.
Yeah, because I was just a loser.
Well, I was a loser too. They stuffed me with it at $1.
Yeah, you were taking the bank's shares.
That's right. Actually, that's technically you're right. It was registered to the bank. It wasn't registered to me.
See, mine was registered to me. Anyway, so let's move on. It's time for the WTF clip of the week, Kev. Now, this is a Canadian spin on this.
Yeah.
Isn't it?
So this one's not even a mashup. We didn't really talk about the election very much in Canada. I thought it was fitting that we make fun of Canada. We've made fun of Trump and the U.S. lots. I think it's time to make fun of Canada. So without further ado, here, let's play my mashup of the Beavertons coverage right in front of the election.
Moving on from Trump's meltdown to the meltdown of the polar ice caps. Teen climate activist Greta Thunberg appeared at the UN to throw down on world leaders for their lack of action on global warming.
People are suffering. People are dying. Entire ecosystems are collapsing. We are in the beginning of a mass extinction, and all you can talk about is money and fairy tales of eternal economic growth.
Wow, Thunberg's comments electrified the globe, solidifying her status as the most powerful force to come out of Sweden since Ace of Base.
As if on cue, Canada's major parties were quick to respond with their climate platforms. Justin Trudeau pledged to make Canada carbon neutral by 2050, which is like making a pact to lose your virginity at prom, if prom is 30 years from now and definitely not going to happen. Jagmeet Singh laid out the NDP's ambitious $15 billion climate plan, a stark contrast to former leader Tom Mulcair's plan to lower the party's carbon footprint by losing as many seats as possible.
Wow. Not to be outdone, the Conservatives unveiled their own ambitious plan to fight climate change.
Meanwhile, the Green Party doctored an image of Elizabeth May so that she appeared to be holding a reusable cup. In response to the scandal, Justin Trudeau said, "Wait, you can doctor old photos? God damn it!"
When they weren't horsing around with Photoshop, the Greens said they won't support any minority government that tries to build a pipeline. For what it's worth, Maxime Bernier said he would also not support a minority government, but he meant it in a very different way.
Now, as the mother of 3 very civically engaged young people, I want to find out why today's kids are too lazy to vote on a tax break for the 1%. So I went to Montreal to find out. Montreal, the Toronto of Canada. To find out how important young people are in this election, I've come here to speak with Philippe J. Fournier, the polling analyst who keeps successfully predicting Canadian elections. Philippe, why do you get to choose who wins the election?
I don't choose anything. The data speaks for itself.
How important are young people in this election?
Well, they were very important 4 years ago, and it helped Justin Trudeau win the election in 2015.
Will Maxime Bernier be able to reach young voters if he promises to show them a dead body?
That would be a strange platform.
So how do we encourage young people to vote?
Well, we have to talk about their issues.
HPV.
Maybe to some extent.
Their issues. But These selfish kids are obsessed with not dying in the apocalypse, but will never get climate action as long as parties target old bastards. Maybe the question isn't how do we get young people to vote, but how do we get old people to stop?
Maybe you bribe them with hard candy. Maybe we say, if you know what it is to develop a photograph, you should not be voting. If you've ever called somebody like this, just go home. Maybe give them all Cialis. They're not going to be going out to polling stations when they're sex.
I left Montreal feeling hopeful about young electors. When I was their age, all I cared about was getting to see a dead body. But kids today seem engaged, and I, for one, can't wait for them to see the dead body of our democracy. For the Beaverton, I'm Emma Hunter.
I gotta admit, those two make me laugh. They're really kind of funny. Yeah.
Yeah, proper Canadians.
I like the Cialis joke. Sex, wink, wink. Or the dead body. And the minority joke about Bernier. It's for those who don't know, Bernier is a little to the right in Canada.
Oh, just a little bit. Just a little bit.
Little to the right. So, anyways, I thought there was a lot of good digs in Canada. You know, that's a little bit for our American and non-Canadian listeners. That's a little Canadiana for you, and just to show that we're more than willing to make fun of ourselves as well.
All right, Kev, let's move on. It's time for the top 5 things to watch next week. So, listen, I wasn't here for this, so I'm going to let you kind of pilot through the all of these here. So, number 5, you guys were looking at the aerospace, right?
Yeah. So, did I do this? Is this my disaster in the making here? No. Aerospace. Anyways.
So here's the ITA. Right, and so what were you guys looking at? You guys were just bullish or bearish? You're just making shit up right now.
Yeah, basically that's
because you were just making fun of the fact that I was short Boeing, right?
Yeah, maybe it was. I can't remember. I don't even know, Patrick. So let's just talk.
All right,
let's
so
forget about what I was
Amazon.
saying. Okay, Amazon. There, that's better.
So on its earnings, it gaps lower and rallies back up, right? And so we had this scenario. Now, to be honest, I actually, look, it's a major component of the index. So I can't imagine us having a big bull push without Amazon at least having some skin in the game. But so far, the price action looks like shit, right? Like it's not that impressive.
No.
Now, with that said, if the S&P is ripping to 3,300 and NASDAQ is going to new highs, Amazon will go double top at 2,000. Like, I mean, it's going to get as the tide rises, all boats will kind of rise. And so I think Amazon will go higher, but it has been a massive laggard and it's nowhere near the leadership. I mean, we'll talk about Apple later, but there is no leadership whatsoever in Amazon right now. Right now, it is the laggard.
Right. Okay. So, number 3.
No comment.
I know, Patrick.
Right.
I'm a little confused.
You're a little drunk. No, you know what?
No.
It's the 7.8% of intellectual violence that is going through your veins. Right now you're. Yes, it is. Everyone, this is what happens when Kevin is drunk. Right here.
No. I was trying to figure out if this was actually the correct top 5 we were watching. So I was trying to figure out if you mistakenly used the previous weeks. So I was like, oh, was the actual FOMC this week? And I was like, oh, yeah, it was. So he's right. This is the right one. I just don't remember doing this, so I have a problem.
You were drunk.
This is what happens when you leave me alone. I just don't remember it. So I'm kind of a little confused.
Lena, come back on here. Like, why were you not babysitting him? Like, this is embarrassing.
Cuppy was here.
Yeah, Cuppy was taking care of it. I just don't remember. Did I do this? Anyways, let's try to get this nightmare over with, and so we can get on to the top 5 things to watch next week.
Well, nobody wants to drink lots of beers.
Nobody wants to hear this anymore.
The fact that you weren't here.
I'm still not convinced I did.
All right, so you said ECB. ECB did something or another, but you forgot. So the FOMC meeting happened, but you didn't really know what happened. So you think that it really is a matter, right?
No, actually, FOMC. No, okay. So
all right.
So let's talk about the FOMC because it actually is a big deal.
How about ECB? First of all, Christine Lagarde is going to start talking this week, so it'll be interesting. She passed the baton's been passed.
Yeah, the ECB, they're like.
Okay, all right, go to number 2.
They're just like, I don't want to go into that's really getting in the weeds. Nothing really happened there, but the FOMC something did happen because
all right, so go for it.
Definitely,
yes,
they definitely paused, and they definitely said that they're not keen to raise rates or lower from here. The market took it very badly, and you got a situation where the curve flattened. And
barely flattened. Like, come on, that was a blip, dude. That was not a flattening. And more importantly, I am going to go on record right here and say that you know what? I honestly think that they're going to have to keep cutting. This charade that this was like just a mid-cycle easing and they're going to do 75 basis points and that's it. I call BS. I give it a better odds than not that they're just going to have to continue.
I'm not going to take the other side of that trade, which means it's probably going to be a raise next. But the one thing I will notice is that I believe Canada now has a higher policy rate than the Americans. They are no longer the lowest policy rate. I think it's bad. And we can talk about that a little bit maybe going forward about Canada and the mistakes we're making, which are lots. But the FOMC is interesting because it definitely seems to be that he's tried to at least signal a pause. And he tried to not let the market bully him into more cuts. You're basically going back to the old thing, which is that the market's going to bully him into more cuts and the economy is weaker than you might
That's
perceive.
why watching the euro-dollar markets is going to be so interesting because will they force the hand of the Fed? I think it's better odds than not. There's a lot of people that are convinced that they're done. I'm not. Anyway, we'll watch and
we'll
see.
see.
So
number one. Number one, how badly will Patrick get schooled on the panel with Brent and Grant? So how bad was it?
You know what? I just went in there and I gave him a little bit of the sauce that I schooled you on with the financial repression rant in Chicago. I pulled up my big guns, and just like you got schooled, they were like, okay, yeah, Patrick, you're right. You know,
okay. I can really see Brent doing that. That seems very much like Brent.
Yeah,
Just
absolutely. But you know what? Yeah. So here's some pictures. And first of all, we had a Market Huddle meetup. It was great to see so many of our listeners come out and have beers with us out there. And, you know, it was a great time. But, it was a little bit sobering because a number of our listeners that meant to make it out and they sent email notes to me either got stuck with because of all the fires that are going on out there and all that. Okay. It's kind of a sobering thing. So just a quick and sober shout out to just those people that, should have been there, but were stuck with having to deal with shit. Is the best way to put it. Like in our thoughts and prayers are with them, and hopefully everyone was okay with that. But anyway, we had the panel discussion. It's a great time, and you know what? Brent is a very tall guy, as that picture may show you.
Yeah, he's 6'5", right?
Yeah, Grant Williams insisted that he doesn't want to look like a short guy beside him, so he stepped up on a step to make sure he looked more in line with Brent.
I see that, not to scale. You kind of look like Bilbo Baggins beside him.
Yes, absolutely.
Okay, top 5 things to watch next week.
All right, so top 5 things to watch. So number 5, just wanted to look. Manufacturing in the U.S. is going to shit in a handbasket, and it's just like is happening in the rest of the world. But the non-manufacturing PMI, which comes out next week, it's going to be where to watch because that's a bigger part of the economy, and it has been holding up and has not been recessionary. So will we see the cracks in armor? Yes or no? What's your thinking?
So I've typically been on the other side of this trade, right? Like I have usually assumed.
You've been calling for weakening, right?
Yeah, I've been calling for weakening. I think, I don't know. I'm going to continue with my weakening call, Patrick. I'm not getting off that bandwagon.
Do you think the market will take it badly?
Nope. I do not think the market will take it badly.
All right. All right. I just wanted to do a number 4 for European PMIs. Listen, we've seemed to every week talk about some goddamn European data, and every week it doesn't seem to make a difference. But it really, I think the reason why the European PMIs continue to be important, and I think I'm echoing your words that you shared before, there are some green shoots happening in Europe. And things have been really, really, really bad. And so it's not hard to go from really bad to just bad. And that's where green shoots appear. And so the question, do you think we've already troughed in Europe?
Yeah, I completely think that we've troughed. I think that although I'm not very...
do you think it'll reflect in these PMIs?
Yeah, if you made me choose, gun to my head, up or down, versus expectations, I'd choose up over down.
Okay. All right. Do you think that reflects in higher equity prices in Europe? Do you think the Euro Stock 50 keeps plugging?
Yes. And I think as also the euro heads higher.
Wow. Strong currency, strong stock market, the whole shebang.
Yep.
And even just a shit bond market, right? As the greatest
it was
short
looking
of
like
all
shit,
time.
but it actually got a bid to it recently. The last couple of days have been strong in Germany. Maybe that's a sign that I'm.
Please tell me that you're not short German bond still.
Oh, buddy, it's like a core holding. I got
Jesus Christ!
It's like
Jesus
JGBs.
Christ!
It's like JGBs.
Oh my God.
You can't call yourself a
Yeah, absolutely. You insist on having at least one Widowmaker in your fucking portfolio every time.
Exactly. Think about how easy my life would be if I didn't have that pain.
No,
Okay,
you just love the pain.
Yeah,
all right,
that's
so number 3, leadership sectors. All right, you know what? I wanted to touch on this because there's a couple of sectors that continue to do very well. All right, so the XLK, which is just broader technology, broken 52-week highs with authority, holding higher highs, trugging along very well. And so they have been, for certain, one of the areas that have done very well. Another area that's done very well is the financials. And this was an interesting one we talked about in the past as well on the show, is that the financials really caught the bid, and they continue to work very well on the upside, and there continues to be some good momentum there. Right, so there's these sectors that are doing well. Another sector that we actually featured in this top 5 things to watch a couple weeks ago was the healthcare space. Actually, it was like a month ago, and it's actually been ripping ever since we brought it to attention. All I have to say to our listeners is, you're welcome. No, just kidding. but it has been definitely a sector that's been doing well, and one of the big components, Johnson & Johnson, seems to have settled. And so there no longer is a headwind to the space. And so that continues to do very well. So there's these spaces that are doing well, but there are others that are complete laggards, right? Right now, you've seen almost no reaction in consumer discretionary. Consumer staples have been trading completely sideways. How the industrials have broken to a higher high. But look at the way that the miners, the S&P metals and mining ETF has been rolling up. It's like, is that a bottom? That's not even a triple bottom. That's a quadruple bottom, isn't it?
Yeah, no such thing. That's only
no such thing as. But look, it's rolling up. Will it go? So I think even look at the way that the energy stocks are holding along the bottom. But it's interesting if you look here, the utilities have started to kind of trade sideways, and when you go to something like real estate, they seem to get very toppy. And the real estate sector is not holding in. So you got technology and semiconductors doing super well. You've got financials doing really well. A few of these industrials doing very well. But there's all of these subsectors that are just complete laggards. And now, so what will continue to be the leadership? Do you think that this, if let's just go with a little fantasy scenario, because I don't want to imply it like a forecast. But let's say the S&P rips to 3,300. Let's just say we got a 10% upside move from here.
Yep.
Okay. Do you continue to believe technology and financials will be the flag bearer leadership generals in the advance?
Not technology. I think it'll be financials though.
I
think financials will do well. I think financials will do well. I think I guess home builders is too.
Oh, Jesus Christ!
Yeah,
stop with your home builders already. The home builders are about to have a 20% drop, so that I win by the end of the year. I'm just like shooting myself in the foot because now I have to cash in on this. But anyway, like, so you do think financials, but you don't think technology, eh?
No.
Eh?
No, I don't think so.
Okay.
Do you? Do you think technology leads?
I think it's just such a huge market cap and a space that if the market's ripping, then they'll continue to be bid. I think so. But by the way, look here. This is the rare earths. Is that a bottom?
I don't know. You keep trying to bring this thing up that nobody trades, nobody cares about, and like I don't like. I'm not really sure.
It's become a micro cap. Dan would agree with me. Like, I mean, the market cap of this ETF is like fucking.
The only thing that looks good for is selling puts that you forget about.
All right. Any last comments on my little rant?
I have no last comments. So let's go to number 2.
Number 2, what the hell is going on with Apple? Now, I have a very important public announcement, service announcement to make to everybody. I have one technical indicator that that is like 100% success rate.
Yeah, but you shouldn't tell people when you fade them, like whenever they phone you up for something.
Exactly.
Is it really? Like I wasn't even kidding. You
weren't kidding. I have certain individuals.
Your mom will not be happy. Your mom is going to be upset that you're fading her on such a regular basis.
There are certain people that phone me. We'll just call them people that phone me. And this one particular people person.
But that person is going to now figure out because they phoned you on Apple.
Absolutely. They were like angry at me that I told them to sell it like $50 lower. And they gave me the flogging and the shaming, and they did so similarly as to why I didn't tell them to buy Bitcoin at 17,000 and a few other of these calls. And so whenever I get these calls, something is about to happen.
I agree. Listen, I know that all too well. I've told you numerous times that when I write an article, the more people that write me to tell me what an idiot I am, the more likely I am to double the position because the better it is.
I'm drawing these trend lines. And the reason I draw this trend line is to demonstrate velocity and momentum. And what happens is that in the tail end, as you get into the blow-off phase, things accelerate. And we're talking about a $1 trillion market cap company, right? Like this is not just someone just giving it a bid. Like this is like froth.
It's the old guy. It's my cherry coke loving octogenarian. He's buying it. He's all in.
So
I wonder if he's chasing it. I wonder if he's chasing it up here.
Let me
chasing it up here.
Let me throw this at you. There's a technical measured move that actually goes all the way to 290. And I would be curious whether this last parabolic phase tacks on 34 more bucks. And it just rips one more thing, and then it's just somewhere under $300. It becomes absolute no-brainer short.
There you go. There you go.
No. I'm not saying that that's what I'm doing, but it would be rather convenient.
If it gets up there, you got to give it to him with both hands.
Especially if it's at 290 or 300 in less than a week or two, then it's a no-brainer. Like if it's if it's just crawling there for the next couple of months, it's different. But if it takes a week or two and we're up another $30-$40, I'm fucking shorting. Like I'm just gonna do it.
That sounds like fighting words.
It's this intellectual violence that we're drinking. I feel this.
It is a little intellectual violence. That is exactly what you're going on. There you go, folks. Give it to him with both fists at 295. Measure move, some sort of dark magic or something's going on there.
All right, number 1, energy. Now this is a very broad thing. Not only has uranium been killed, natural gas has been recovering, but oil's been wonking around here, and we wanted to talk some energy and particularly what's happening in Canada with the elections and everything. We got so many things to cover. Let's just very quickly I'm going to use the symbol uranium participation unit that Cuppy talked about when we originally and was that a bottom? Like, look at that little reversal candle that came in. It went from 380 all the way back to $4 in just 2 days, right? Like, just drop and pop.
No, man.
But no, 1 day doesn't make a new trend. Don't misinterpret me. Like, that's not enough information.
That looks like something I'd be trying to catch, not you.
Yeah, but the point uranium's been took a leg lower. My intuition is to buy the dip. Maybe I'm a fool. Maybe I'm going to join Cuppy's little fool party, but I actually think that's just a buy on dip.
I don't know. I kind of feel like all these energy names, whether it be uranium or the oil.
Yeah, they're all stupid cheap, aren't they? It's just crazy.
Like, I don't know what's going to... Like, I'm hopeful that it's going to change, but like part of me goes back to there's no such thing as a triple bottom with the energy.
So call me a fool. But I actually think from a seasonality perspective that nat gas can really run here. I don't think that there's another shortsellers.com out there to give it the little extra kick. but like that was the 2018 little rip, right? But I think I think we can go here. I feel that we can be north of 3 and maybe 350.
I feel like if you're going to own energy, you should own nat gas over like the crude oil. Like, I'd rather own that, like those things. And the nat gas stocks, they're all like, it's so ugly. I don't even know how to play it. This is the real problem, right? Is that all these stocks are so cheap. You want to own them and like back up the truck, but the reality is they just keep going cheaper and cheaper and cheaper. And in fact,
you like look at something like Chesapeake Energy, which is trading at $1.50, and you're like, oh, you know what? That can't get any lower. Well, no, there's a major support line. It's at 0. And
you know what?
And when it goes from $1.50 down to 50 cents, you still got slammed, right?
Yeah. So Patrick, pull up Pengrove Energy, PGF in Canada today, got taken over. Maybe I should say taken under. It was trading at 20 cents. It's getting taken out at a nickel.
What?
Yeah. Like, the reality is that these guys, it's so ugly out there, and especially in Canada. That's a whole other story. That's
from $1.30 down to 20 cents, and then gets taken out at a nickel.
Yeah.
My God.
And it's just unbelievable that this is just continuing, and it's painful, and I don't know if it's going to, we could talk about Canada specifically because we seem to be doing everything we can to shoot ourselves in the foot. Like, we, shot ourselves in the foot about our energy policies before, and we decided to pull out a gun and shoot ourselves in the other foot. And I know I sound like a little bit of a West Coast crazy right-winger, but the reality is that if we don't...
Because you are?
No, I'm not. I'm actually not. Like, I didn't vote for them. I'll be honest with you. I didn't vote for them. I think that I had problems with them. But the reality is that if we don't figure out ways for our country to make money, and one of them is to sell energy, let's face it, that's one of our big exports, then we're going to find ourselves a lot poorer. And it just makes me mad because, as we as a country are importing, tankerfuls of oil from Saudi Arabia where... Let's just say that their human rights might be a little more suspect than ours, and in the name of quote unquote climate change, we're supporting another regime instead of just developing our own asset, and it just drives me absolutely bonkers, Patrick. And I can't tell you how frustrated I am with it, and I really worry about Canada's future for the short run because I don't see this getting better before it gets... I don't see it getting better before it gets worse.
Yeah, you know what? That story within Canada was crazy, right?
Yeah, so in Canada recently, which is basically the flagship Canadian natural gas stock has, gone and moved their headquarters to the U.S.
To the States.
Yeah. And it's not just like headquarters, like a lot.
I mean, the very name in Canada was Energy Canada, right?
They got some terrible new name. What is this new name?
Oh my God!
Let's take the time to shit all over this. 1 second. Let's get the new name. Where is it here? Because it's so bad.
Is it a symbol like IVV or something? Oh, what the hell was this symbol?
I don't know. Oh, I didn't realize that. There's also like the bow tower. And,
Oventive. Oventive.
Yeah, like what the hell?
Oventive? Like what? How did they come up with that name?
Like, did Drake name that? What the hell is that? Like, that's a terrible name. Anyways, I'm so frustrated. I'm so disappointed. I just feel like it's really going to end badly for Canada. I'm very disappointed that this is occurring.
OVV is going to be the new symbol.
Oh, it's terrible.
OVV.
Anyways, it just makes me mad. And one thing I do think about though, Patrick, is that if I was trying to make a bullish scenario, the fact that these guys are just basically unable to produce and to find any new oil and to actually run a business is ultimately a very bullish development for the commodity over the long run. Right?
Okay.
Like, let's face it, the last thing you need, if you actually want a commodity to go up, the best thing you could have is like all the companies going bankrupt. Or or them like just moving out of Canada.
Fair enough.
The only thing that I can tell you is that the only part that gives me solace is the fact that all of this oil is still going to be there when they come back 10 years from now and are drilling it then, right? When we finally get our act together
okay, let's just circle back to oil. Yeah, good point though. I like that was funny. But you still think that oil cracks 52, 51?
Yeah, so I do. I don't think there is such a thing as a triple bottom. Like, I think it's.
I'll take the other side of that.
Really?
You want to take a little Duke and Duke here?
But Patrick, I'm such a long-term energy bull that I find myself.
No. This is why I'm not making it a stake bet. Like, you know what, Duke and Duke is something that you can tolerate.
Duke and Dukes are important to me.
Okay, so how about a burger? How about a burger then?
No, but it's not just that. Like, it's anything. I don't want to bet if I think it's going higher. I just scared. And listen, the fact that I'm so scared about this is probably a sign that you should be buying it. Because go back to Don Cox.
Ready to take the other side.
Yeah, Don Cox says those who know it best love it least because they've been burned the worst. That's a great line. He's a famous Canadian strategist. I feel like maybe I'm going to be suffering from that. Because I do find myself wanting to buy this shit.
So you here are goading our listeners into this idea.
I'm basically
no, you're goading them. You're goading them because you're telling them there's no such thing as a triple bottom, making them all go short oil. But you don't have the balls to put $1 on the table.
No, because it's very important
Duke and Duke.
No, it's very important to me.
Right now, listen.
I won't do that. I won't bet against oil.
You right now,
bet against oil.
Then you turn around and say there is such a thing as triple bottoms.
No, I'm waiting to buy it
right now,
cheaper.
Say it right now. Say there is a triple bottom and it's in oil right now. Say it or take the bet. Pick one.
Okay, so what's the bet? What's the bet? What do you want to bet?
I say oil will not break below 51, 52.
Like 50. What do you mean 51?
All the lows. So the June, August.
Price.
51. We will not be below 51 for the rest of this year.
Wow. Okay, sold. Okay,
All right. There we go. I
love
it. I love it.
I'll do a burger. I'll do a burger.
Burger? Because you don't want to insult.
I have two of them. I have like two of them in store that you owe me, so I'll just.
All right, there you
back.
Go. All right.
Okay.
All right. Everyone heard it. So there. Now, Kev, parting words of wisdom.
Okay, so this one's specifically for me. Okay, and I'll read it, and the people will know why. Inflation is when you pay $15 for the $10 haircut you used to get for $5 when you had hair. By Sam Ewing. Patrick has got he's a
True
little
that.
Patrick's a fancy boy. He pays like $120 for his haircut.
That's inflation, though. Words of wisdom, Kev.
Words of wisdom. That's parting words of wisdom. Anyways, for those who want to find you, Patrick, Lord help us why they might want to, but where would they find you?
They can go to bigpicturetrading.com or they can follow me on Twitter at Patrick Ceresna.
Yeah, so listen, everyone should give Patrick a follow.
Hey, where should you follow?
Well, no, but we got to give you a little bit of a follow. Patrick, we got to get your numbers up on the Twitter. Please, everyone, follow Twitter, Patrick. And
it's that bad, right?
He promises to do little funny things every now and then. And he promises he'll work on it.
I promise I'll work on it.
He promises to work on it. You got to understand, Patrick's actually fairly new to Twitter, and for a while he used to phone me or text me.
What is this Twitter? What is this Twitter?
What is this Twitter? What do I do with this thing?
What's this Twitter thing?
What are these people talking to me about? How do I do this? Why did I just upload the picture of my face to my post like Jeff Gunlack? Remember when Jeff Gunlack did that? He was trying to upload his picture, and he just tweeted it out. It's so good.
Oh,
he was so bad at Twitter, and he's trying to do it. And anyways, listen, next week we have Jimmy Jude, hopefully, and Jimmy Jude has got the all-time greatest Jeff Gunlack Twitter response, and make sure we talk about it. Don't let me forget, Patrick.
And that's awesome that he's coming on, because next week is our 1-year anniversary.
Yeah, so he's a perfect guy for this. It's going to be a lot of fun. I'm going to remind him, and he'll tell you all about his Jeff Gunlack Twitter kind of exchange, because it's awesome. It's probably one of the greatest lines in Twitter history. I would have loved to have said it. Anyways, you can follow me at Kevin Muir, or you can go to the blog and see themacrotourist.com. Thanks a lot. Take care. Have a great weekend.
Thanks, everyone. All right, so here we are in the After Hours show, and Daniel stuck around to join us for this. So, Dan, welcome back here. And so, Dan, you're out in California. I was just actually out in San Francisco just this past week, and yeah, it's all over the press, just obviously all the fires and everything that's going on there. What's going on down there? Are you okay? And are you in an area that's being impacted by this? Why don't you give us an update?
Yeah, so thanks. Thanks for having me, and thanks for asking. We are fine here. So I live in San Rafael, which is in Marin County. Means you go over the Golden Gate Bridge from San Francisco to get here. I'm about 7 miles north of the bridge. The fires around here are in a town called Windsor, which is, I think, about 50 or 60 miles north of me. We've had some smoke in the air, but no worries down in this area. The big issue we've been dealing with is PG&E now, and
the power outages, right?
In our day and age, if you're going to get sued every time there's a fire, they're going to start putting out electricity every time the wind gusts, right? So we had no power for 3 days this week, which was a blast. Let me tell you, 3 days doesn't sound like much until you lose your power for 3 days. And
yeah. So they just cut it off, like they didn't, for the full 3 days. You were powerless.
Yeah. Yes.
Wow.
And, are you allowed to? You can just go and grab a generator, right? Is that what a lot of people are doing? Just doing manual generators?
Yeah. So smart people did that in advance, and other people like myself found out that they're sold out once you try to do that.
Yeah. That's fun.
Except for that one guy that's selling them at 3 times the value out front of Home Depot.
Exactly. So the thing about it is, for this day and age, you need internet to work to do your job. Mm-hmm. So even if you had a generator, you weren't working if you're doing it online, because you don't have your internet in your house. And then if you try to use your phone as a hotspot, the phone system is taxed fully. Yeah. So you're not getting any data through there anyway.
It's not like you live in an area where technology is important or anything, though.
No.
Anyways,
some of the worst cellular connectivity is in Silicon Valley, and try to figure that one out.
Okay, so let's you were mentioning earlier the fact that these microcaps have been underperforming, and it's obviously something that most value managers have been complaining about for a while. Do you think that this is going to change anytime soon, or do you just kind of think I'm going to pick the 20 stocks that work? What do you see as the potential for this atmosphere of this trade being so shunned, kind of at least receding?
I think I don't know when it ends, but I think we're closer to the end than the beginning. So I think you can actually look at large cap and try to get a sense of when it's going to change for microcap. And what I mean by that is there's a shift from active management to passive management, as you know and you've written about, right? Yeah. So as long as that shift is going on, there's more money going into a handful, or it's a pretty big handful, but a handful of stocks, but definitely not going into MySpace and going away from active managers, so they don't have the ability to look at this. So once there's a tipping point and people start saying active management is more important, I think that's when this whole group bottoms out.
So, but the one thing that I kind of push back to in all these people that are complaining about the how much the passive is taking over is that in this kind of change is an opportunity. Like if you're sitting there and you're not in the index, that means that the stock is cheaper. If nobody's buying your names, then that means you have more cheaper stocks to pick from. And yeah, I get it. Eventually, someone has to pay more for them, because the reality is, if they're just forever cheap, you're not going to make any money. But the truth of the matter is that if you're a true kind of fundamental investor, then we should see a situation where that this is creating more opportunities and making it easier for active guys to outperform, because you're getting a situation where you can buy your stocks at like pennies on the dollar or cents on the dimes on the dollar, versus having to pay up for growers, like paying full price for Amazon.
Well, you're absolutely right, but it doesn't happen immediately. So if more money is leaving active management, you can buy a cheap stock, but there'll be sellers in that stock as more money leaves current holders of it to go to the passive management. So you have to, it's all about the money flows at the end of the day. So once the money stops leaving the group, then they have an opportunity to start outperforming. But as long as money...
But I agree with you that the money flows are important, but ultimately the bigger companies should be in there buying these cheap assets.
Well, that is, so I was meeting with one of my investors today, and he said, "Well, this group's under pressure. Where do you see money coming in to help these companies that need money?" I said, "It's going to be strategics." I said, you look at companies that are trading below the asset value, and who better to step in than somebody else in the industry to pay up for that.
Yeah, exactly. It's like when uranium was like this. You could buy an ounce, you could buy uranium cheaper on the stock exchange than you could by actually trading it on, actually buying uranium as a uranium company. So it made no sense for people to go out, instead of a uranium miner actually mining uranium, they'd be better off just going out and buying it on the exchange.
Yeah, but the problem with that from an investor standpoint is you're sitting there holding an asset that's doing nothing, maybe going lower until the day it decides to go up 200%.
Yes, you're right. And then not only that, the truth of the matter is that a lot of these strategics are stealing some of these assets.
Yeah. Oh, yeah. That's been one of the concerns with one of my companies that's trading well below investment capital, and the clinical results. This is another healthcare company. Clinical results.
Okay, well, give us a name. What is it?
Oh, that's Hancock Jaffe. Its ticker is HJLI.
HJLI. Okay, yeah, I'm with you.
And that
there's a chart of it.
Yeah, it's how's that look for you? I don't know if you'd even dare to ski down that, right? So,
no, that's a good line.
We're going to use that as the title of the episode.
The amazing thing is they put out 3-month data on their they have a valve to go on your leg to replace having to wear those pressure socks. You need pressure socks because your valves aren't working. So it's a replacement valve. There is no competitor in the market. They had 3-month data a few months ago. It was fabulous. They put out 6-month data last week. It showed an even better improvement versus 3-month. That's 6-month is the data everyone's been waiting for. That's when strategics and potential buyers will say, okay, this product's for real. So the science works great, and the stock is on its ass. I mean, the science works better than anyone could have hoped for if you'd bought the stock.
Right.
And yet the market doesn't care. And in fact, it's not only that, it's actually punishing it. Imagine if they'd had bad news.
And coincidentally, they need more money, right? So that's
okay. So that's why the market just will not bid up anybody that needs money.
Right, exactly. But even once again, I'll take the dilution to own this science.
Right.
Yeah.
Right.
And you know, one of the things that I always used to find with my days when I was on the desk is that sometimes the market would punish these guys and somebody smart would come up and go, oh, I'll do that deal. I'll just take 100% of it and I'll do it a dime above the market.
Yeah. Yeah.
Right? Because everybody is expecting the dilution. And we've, in fact, I know a great story of a guy that got short. Everyone knew this deal was coming. It was a mining stock, and he shorted the shit out of it. And then what happened was this upstart of a kind of a new non-bank broker dealer came in and did a bought deal above the market. Like it just to make a splash. They were new. They came out and they did this bought deal. And it immediately sold. And this guy was short, and he basically phoned up and yelled at them, like, do you know who I am? You got to give me some of the stock. And they said, well, you don't pay us. Go fly a kite. And the guy ended up being a great deal for the people who bought it because this guy was chasing in the aftermarket to get a short in. So I do think that sometimes the market gets punished, and maybe that's not the case here. And unfortunately, there's no buyers, there's no buyers. You do need a situation where there's a big buyer. But I almost wonder if we get into a scenario where the stock market starts to go up again and people return, like a retail returns to the market, that they might start looking at names like this, and the repricing might be quicker than we expect.
Oh, I think you're absolutely right. But you brought up an interesting thing, which is shorts. So in this stock, it's pretty thin. It's not wildly shorted. But I have some of my companies that have significant short positions in them. And the shorts are obviously controlling the trading. You can see it. But
okay, you got to give us a name, Dan. We got unless you're uncomfortable. But like,
oh, happy to. So okay. Cat, which I've talked to you about for years, Kevin. Ticker's CATS, CATS.
CATS. Okay, let's have a look here.
So, okay. This is one of my winners.
Okay.
And I got into this thing at around $4 a share, and it's been my largest position since that price. So
and the shorts they're non-believers, and they kind of try to talk it down. Do they? Like, how does it work?
So the short position in this is 2.4 million shares, which is 35% of the float. It's massive, and they're paying about 30, it depends on who you're with, 30 to 40% annualized to borrow the shares to short it.
Wow.
Yeah. So they don't believe the story. What they don't believe is this. The company did about 18 million in revenue last year. I can't remember the exact number. They're doing 35 million this year, and they're going to guide in the next 2 weeks when they report, and they're going to guide to 90 million. I say that because they just got a loan done with Goldman Sachs, and in the loan, they guaranteed at least 90 million in revenue. So the growth is fantastic, but I think the shorts are just saying, "Oh, we don't believe that they can put up these kind of numbers, and stocks move too far." And I think they're screwed. And if you look in the last week, the stock has spiked. What's that, about 20% or something? It's about to take off because they're nailed. And I see the potential for short squeezes in a number of my stocks where,
okay, let's get another one. So we got CATS. What else do you see that could get squeezed?
Provention, which is PRVB.
Okay, let's have a look at that.
So, okay.
I notice a lot of biotech stocks in your names here, Dan.
Yeah, well, the Caddis is not biotech. There's a lot of healthcare.
Okay. So what happened here, by the way, that this thing had a huge spike in June, and
so this is biotech. They reported fabulous type 1 diabetes results, delaying onset of type 1 diabetes in kids that are genetically inclined to get it, which that's the holy grail for diabetes is people know you're going to get it in most cases based on genetic markers. How do you stop it? And these guys seem to be able to do that. The stock spiked to 20-ish, and then they said we're going to do a financing, and it traded down. They tried to pull the financing, but you tip your hand, everyone knows it's coming. So they ended up doing this financing at $8 a share. There was a huge short position. And insiders have been buying the shit out of the stock. I said I can swear, so that's
you're definitely allowed to swear. You're just
Insider-
not allowed to say inappropriate words like Patrick does.
Oh my gosh! so, I mean, you get insiders buying a couple $1 million worth of stock. That's a telling signal, right? But what happened was, and this is similar but different to your story about the short guy. There's a big short position in this, and they did a deal of total $60 million at $8 a share, and they shut the shorts out. So what happened was the shorts went out and knocked it down and just pressed their bet. This is one. I think this is kind of a layup for year end because smart money came in at 8. Nobody likes to show a loss on doing a financing, so they're going to push this back up through deal price and then try to run it into year end is my guess. Plus, they're also filing their IND with the FDA for a type 1 diabetes drug that's worth potentially billions of dollars.
So, Dan, I want to change the topic a little bit here.
Yeah, sure.
Because you know what? You've been giving us great stories, but I have to say that, like, having dealt with a very large amount of retail investors, you know, when I go and tell someone I'm bullish on the stock market, they couldn't give a shit. But if I turn around and give them a great story about a stock and why it's going to go up, they will just soak that up and load the boat. The retail investors are very susceptible to a great story. That's just like the human nature. And so a lot of our listeners right here are hearing these stories and might be excited about one or two of them that they're hearing from you. So now, like, you've been in this business for a while now, and you obviously have gone through the trials of and the learning process of how to deal with microcaps. So in this situation, what advice could you give our listeners, or what do you wish you've known when you started out, like in terms of someone that's hearing these stories? How do you size your trades? How do you manage them? What are the red flags you're looking for that they should be watching out for when they're getting into these kind of microcap stories?
Yeah, I mean, the first thing I do is talk to management. Management's the most important thing, and realize that every management team lies. It's
so talk to them just so you know what the lie is.
It's a degree of lie that they're telling you, right? I mean, that's really the bottom line. They're all out there trying to get their stock higher, and in microcap, they all need to raise more money for the most part, right? So they're telling a story, and you have to figure out which parts are real and which parts aren't, and that's the toughest thing to do. So I mean, I would be taking everything management gives as guidance with very jaded on guidance. So that's the first rule. You read a transcript of Seeking Alpha and don't believe any of the guidance, right? Yeah. That's what I would say. You know, I frankly, in the last year, I got burned twice by management teams that were quite frankly fraudulent, and that happens.
Yeah. That happens in the microcap.
So how do you, Dan, in terms of sizing, how do you, like, obviously everybody's different because everyone has different risk profiles. What do you have, like, benchmarks in terms of I won't have a position bigger than X percent? Like, how do you kind of decide how many names you're going to own, and do you use leverage, or is it just pure cash? Like, how do you run your stuff?
Yeah, so I'm running this as 100% long, but no leverage involved. And the reason I'm doing that is because I've been doing this long enough to realize that you know, I don't want to try to play market timer, and I'm not even going to tell you I'm good at it or not. It's a game that gets you away from the important things, which is that over time, and we kind of touch on this, over time fundamentals are going to drive this, and you'll get your value if you can get the fundamentals right. So that's sort of the game plan I'm sticking with from a top-down perspective. I tend to start with smaller positions and grow them over time as I develop more confidence in not only in the management, but also in the story coming together the way they say it's going to. So, you know, you speak with someone, they tell you X, Y, Z is going to happen. And if it does, then you start to, you know, you start saying, okay, well, this makes sense. And if only X and Y happens, then you don't get any bigger.
All right, I want you to elaborate on that, Dan, because do you have a tendency to dollar cost average down into a loser, or do you have a tendency to add to your position once it's winning? Like, what's a tendency, or is it both, and it's just dependent on the story?
I tend to add to positions that are executing, regardless of if they've gone down or gone up.
Okay. So it's story-based.
If a position is not fully sized. And, once a position gets over 10% of my portfolio, so I run a pretty tight portfolio, right? Once a position gets over 10%, I'm not going to be adding to it. And then, I'll start to selectively trim it as it gets, I've had Catasis. I was a 10% position at $3.50 when I finished buying it. It's at 15 or 16 today, right? So, but my position's only around 18% right now. So
you've been trimming, right?
Yeah, I've been taking a lot of money off the table. When it got over 20, I took it down pretty good. So, and I took it down again recently.
That's a good problem to have. I wish that curse upon everybody.
Yeah, and frankly, I really want to let things ride more than I do, because if this is truly public venture capital, and venture capitalists make 100% of their money from 20% of their portfolio, so I should keep the 20% that's working really well. But I guess I'm arrogant and think that I can pick more than 20% of my stocks will be winners, right? So I spread it out.
Yeah.
So do you actually think that the venture capital opportunities in the public market are greater than somebody that, let's say, had access to the private market?
Well, I think the private market's incredibly overvalued, and you're seeing that as Uber and Lyft come public, and they have lockups expiring, and those things are down. I mean, look at how WeWork was valued. They tried to go public, and all of a sudden people realized what they had, right?
So what sort of kind of, like, you're on the ground a little bit there, like you're in pretty close to San Francisco. Do you think that this is going to have ramifications? Do you think that WeWork was the start of the end?
I don't think it was the start of the end, because I think you've been seeing this for a little while with, like I said, like Uber and Lyft, and then you had that disaster. What was it, Theranos, right?
Yeah.
Yeah. So I really think that that for this area, the number of, it's definitely, the game is changing, but it's the start of the end. It's so difficult to say, because I think from an investor standpoint, I wouldn't be putting money into this. However, so many investors look in the rearview mirror and throw money out there, and there's so much VC capital right now that they can continue showering these companies with money for a while yet, and watching them lose at the end of the day, right? And
so you don't see that like drying up anytime soon?
Oh, I do think it's moving in that direction. I totally do, but I just don't know when.
Okay.
And it's very it's so funny the way they price their books. Kevin, you bid up my stock in this round, and I'll bid up yours, and we'll both show a nice gain and take some fees for it, right?
Yeah. No, I know. And how about these private equity guys? They just, not only do they bid them up against each other, they sell them to one another.
Right. It's wonderful.
Yeah. And then and the fact that WeWork, like, they just, if you're just doing like a marginal financing at the margin, it makes sense to just do it yourself and do all of it at a new price, because you get to mark up your whole price. Like, you could almost set your own price. Anyways, it's just like, I think it's mind-bogglingly crazy, and I'm probably more worried about it than most, because I look at the WeWork and I just wonder if you have something that big that can go down that quickly. It wasn't like it was 10% overvalued. Like, what did they go? They got chopped in like 80%, right? Am I right? What was the number?
Yeah, something like that.
Well, it was more than that, dude.
Was it 85 down to 6 or what?
It's 45 down to 8, I think, is what it was. But whatever.
No, I think it was higher than 45. Anyway, it doesn't matter.
It was more than 45.
It doesn't matter. It wasn't just 10 or 20%, and it wasn't on $100 million stock. These are billions and billions of dollars that are getting just kind of marked to fantasy, and it's just it's unbelievable. And I think we're going to look back and we're going to be just amazed that we allowed this to continue with these private markings. Like, I think it's crazy. But anyways.
Correct me if I'm wrong, Kev. Was it there not just a headline that Ackman came out and said that SoftBank was a zero?
Yeah, that's what.
But yeah,
there was some headline. No.
But he also said Herbalife was a zero.
Well, yeah,
so let's not listen to him. But
no respect from you, is there?
I don't know. He's not one of my favorites. I'm definitely not gonna. Maybe if somebody, if Chino said it, I would be a lot more sympathetic. And
there you go.
Yeah. I'm scared. I'm scared of that whole venture capital, or even more so like the I don't know if it's called venture capital when it gets that big. Is it still venture capital with WeWork, or is that just private equity?
Yeah, that's called venture capital. But the thing about WeWork is it might be 100% overvalued right now.
Yeah, look, it's still, yeah. No, I hear you. But just the fact that you had this sort of mispricing is just mind-boggling to me. And I've seen mispricings in my day, but this is on a big asset. This isn't on something small. Mm-hmm. And I think that this has been affecting economies. That's how important it is. And I think that when we look back, we're going to be kind of I'm not as convinced as you that this wasn't the beginning of the end. Maybe you're right. Maybe they'll be able to get it even bigger. And maybe it is.
I think the end is coming. I just think it can take a lot longer to play out before it gets really ugly.
Yeah, and I actually hope that what you find is that this money goes, instead of it causing some sort of massive dislocation in the economy or the market, it just comes out of private and goes into cheap public markets. That's what my hope is.
Yeah.
I might be wrong, and who knows. But anyways, that's the story for another day. So you don't see any signs of San Francisco slowing down yet? Like, you think it's still everything's okay? Oh
no, the first signs are there, no doubt.
Oh yeah, like what are they? Like, tell me what you see.
Real estate prices have come down 1% year over year, but it's slowed down. Rents are decreasing. There's no doubt about that. It's a number of things, but it's happening slowly.
The air's being let out of the balloon, even if it's initially starting a little bit slow. You're seeing that momentum that was there is sort of stalled, right?
Yeah. And it's funny, there was an article about how the WeWork employees are really mad because their options are worthless. And I had dinner at someone's house last night, and their son is tired of the VC game. He's just a salesman, like 20-something years old, right? But he went to a couple startups and realized that, hey, I'm working for crap salary and these options are worthless, and he wants a real job, So it gets ugly quickly when people's options are worthless.
Right. It's in an environment where everybody's making money on the upside. Everyone's happy, and then all of a sudden, as it turns, it gets ugly and it gets scary. Yeah. And it'll be interesting to see how many guys are really holding the bag. Although I don't I'm not a big Ackman fan. He might not be wrong that SoftBank is a zero, because the reality is that they've bought every crazy piece of shit that you can imagine, right?
Oh yeah, and that applies to the public markets too. Just in the sense, like, WeWork had the right investors, so did Theranos, and these people pay up for companies that have cachet. And then if companies don't have cachet, they don't get the valuations. And my companies don't have cachet. That's why I feel really comfortable buying them at these levels. And I'd love a marquee investor or two to come in.
You know what? You got to convince them to wear the black turtleneck like what's her face did.
Yes.
Theranos. It's funny that you mentioned that, because we actually don't hear about that story very much, in Toronto, and because it wasn't a public, equity, it wasn't really something that is on anyone's radar. But it sounds to me like you guys, it really affected the culture or the thinking in the Valley. Is that correct?
I don't know. I brought it up just as another classic example of overvalued down there, and people not doing their homework.
But it wasn't an example of like you knew people that had invested in it or anything like that. It was just another example of something completely mispriced.
Yeah, it's an example of how the VCs, in my opinion, are more than willing to piggyback on other people and not do their own homework.
Fair enough. Okay. So, Dan, why don't you, you know what, we're going to wrap it up here, but before you go, why don't you give us one last name that you like?
One last name that I like?
Yeah.
Geez, I got to think about that one for a second. So I'm going to pull
not a biotech one. Go look through your inventory. Pick us one that's not a biotech.
You're like, you know what? You're just catching him off guard. Like he's
okay. He's good. Dan's gonna adapt. He's gonna flow. He's my buddy.
I've only given you 2 biotechs, by the way.
Really? It just felt like they were all like, biotech. You know what? We're Canadians. We're Canadians. We're used to like gold stocks and like like uranium mines and stuff. It was like, what's all this tech and
technology
biotech stuff? Like Canada doesn't have any of those, and not only that, when we do, they just seem to screw it all up, like research in motion or something. So we're kind of suspicious of those.
Okay, I can give you one true microcap name that doesn't trade very much, but I think is potentially a 10-20 bagger.
Sure, let's
go for it.
Yeah, there's this company called Moniker Group. The ticker is MKGI.
MKGI, okay.
So you guys are familiar with Airbnb, right?
Right.
Yep.
So Airbnb does what's called alternative lodging rentals. So ALRs, and ALRs are 25% of the travel lodging industry. So if you're going on vacation, 25% of the time you're likely to spend your money on Airbnb versus a hotel. Online travel agents, which are Expedia, Travelocity, etc., can't book alternative lodging rentals because they don't have access to the properties for 2 reasons. One, they're not immediately bookable, like Airbnb's not, right? And 2, they don't pay commissions. So why are they going to show you that versus a hotel? Moniker Group has assembled 3 million properties that are alternative lodging. They're all professionally managed, so property managers run them, not individuals. They're immediately bookable, and they pay a commission. And then they're partnering with a company called RateGain, and they're rolling out to all the major online travel agents, which are, booking. There's one up there in Canada, WestJet, I think, that you can book travel through the airline. United Airlines, Expedia, Travelocity, etc. They go down the list, and this is going to be the vehicle that sits between alternative lodging rentals and online travel agents.
There we go.
Okay, what a great idea.
So if people want to learn more about it, where MKGI, but if they want to learn more about it, Dan, why don't they tell us where to contact you and where to subscribe to your research?
Yeah, tailwindsresearch.com, or just email me, Daniel@tailwindsresearch.com, and happy to share with you. I've written a lot about it. It's all there online.
Thanks a lot. Thanks for being with us.
Thanks, Daniel.
Guys.
Take care.
All right, Lena, get on here.
Hello.
How was that? Was that not bad for a 50-second episode?
It was good up until about, when you guys were arguing at top 5 things to watch.
Oh, that's it.
Really?
Tune you guys out a little bit.
Didn't like it. I was actually very confused. I was like, I was confused. By the way, my intellectual violence pale ale, they didn't put the thing on correctly. I don't know if they were having too many of these while they did it.
Like you got the bubble in the
label is like it's got like more than a bubble. But I still like it. So let's rank this bad boy. Let's rate this. So who wants to ladies first? Ladies first. Patrick, go ahead.
Well, thank you for asking, Ken. I actually liked it. You know what? For a 7, if I was to ever drink a 7.8% beer, which is not something I normally do, this is actually quite enjoyable.
Yeah. So give us a number, Patrick.
I'm not going to go into the 9s, but I think a respectable and I say that I consider it a good score when I give it an 8.4. Like
8.4. Okay, that's fair enough. I agree.
Like I'm giving it an 8.4, and it's a good 8.4. Like I'm not trying to be disrespectful with an 8.4. It's a good beer.
I hear you. You can stop talking now, Patrick. Lena, go ahead.
I would give it an 8.2.
8.2. Why? What was your problem with it, Lena?
Problems. How about her joys?
What were your joys of it?
No, it was good. It's just it's on the hoppier side than what I usually like. But otherwise, it was actually really good.
I'm giving it a 7.8 for the 7.8. I don't like any of these ones with big alcohol content. But in terms of alcohol content, usually I give these things like 5s and 4s. I have to say, if I was going to drink a 7.8, this would be my 7.8 that I would drink.
There you go. I agree with that.
Yeah.
I agree.
Anyways, Patrick, it's good to have you back, buddy.
Yeah, thanks, bud. It's good to be back. It was like 2.5 weeks on the road, and now I'm back, settled in, ready to go. And I'm looking forward to next week when we're going to have our 53rd episode and the 1-year anniversary of the Market Huddle. It's awesome.
Are you guys getting each other anything for the anniversary?
I'm planning a big surprise.
I hope it's shorts.
I got Patrick a English.
Oh my God. Whatever, dude. I'm not wearing it.
Exactly. That's the whole point.
Anyways, what do you guys got planned for the weekend?
Wow. I'm just glad to be back. I haven't even made any big plans.
Lena, how about you?
I am going to be playing Dungeons and Dragons.
Come on! Seriously? That is so awesome. That is so good. So, Lena.
Yeah.
It wasn't immediately obvious. I was a little bit of a D&D fan when I was a kid.
Get out of here.
Well, I was too.
For real?
When I was a kid, for sure.
Really, Patrick?
Oh,
yeah,
get out.
Oh, yeah. No, I was.
So my
elf always killed the dragon.
So my wife's friends one time said, oh, but like your husband, he's a little bit of a geek. And my wife was like, what? He's a geek? And they're like, yeah. And they're like, did he play Dungeons and Dragons? She's like, yeah. And she's like, and they're like going through all these things. Do you like computers? Yeah. Well, he's a geek. So tell me, is Dungeons and Dragons making a comeback, kind of like neon, like 80s music?
I don't know if it's making a comeback, but a group of my friends are really into playing games.
Yeah.
So they were in search for another game because we've crushed all the other games, and they were like, let's play Dungeons and Dragons. And I said, okay.
Cool.
So we'll see what happens.
Oh, so you've never done it?
No, I've never done it. I've heard of people playing Dungeons and Dragons. I've seen people play it, but
You're
never
not
participated.
hardcore until you use loaded dice.
Yeah. So, Lena, we're going to insist on an update next week. Insist.
Oh, of course.
But I didn't realize you're a bit of a game player. So what are the ones that you like? Like, are you, what's the one that everybody plays?
Catan?
Yeah.
Catan.
So are you a Catan player?
Yeah, that's obviously, that's on
I'll
the
crush
roster.
you guys in Settlers.
Oh, really?
Oh, yeah.
We should maybe get together over steak and beers and play Settlers of Catan.
There you go.
That sounds like
some
fighting words.
wholesome fun.
Fighting words. Fighting words from Lena. I like it. So what else do you like?
I've played some. I've had some bad influence from Luke, so we've played some miniature games.
What's that?
Like Warhammer, Shadespire.
I don't know what those are.
If you don't know, that's kind of like another level of geekness. So
it's like a
I'm
level
not
up.
surprised that you don't know it. Yeah, it's a bit of a level. It's a little bit too hardcore for me, but I've tried it, dabbled in it. It was fun.
You'll try anything once.
Yeah, like if it's a game, like why not? We'll try it. I'm a pretty good sport, I think, when it comes to that stuff. So.
Well, that's good. And now you're going to do Dungeons and Dragons.
Yeah, we started last weekend, just doing like character building or whatever.
So what's your character?
It's not finalized yet, but
So
it'll be like an elf wizard.
Elf wizard. There you go.
Yeah, but they're telling me wizard is a little bit too complicated. I should pick something.
Oh,
else,
you just
but
got to
I
keep
don't know.
throwing fireballs. You're gonna be fine.
Yeah. I just want to be able to dress up about it, you know.
Oh, you guys are doing like the whole.
Not yet. Once I'm sure we'll get into it during the holidays.
It's Halloween.
no,
I
it's
love
Halloween.
millennials. That's all I can say. That's all I can say.
What? What does that have to do with
No, but
millennials?
you guys are gonna dress up and do this stuff. It's awesome. It's awesome.
Well, if you're gonna do it, might
I
as well,
agree.
you
Might as well
know.
go the whole 9 yards.
Oh, yeah.
Exactly.
I'm completely with you. That's awesome.
So,
Anyways, I love it.
All right.
but I'll give you an update next week about my D&D experience.
Okay.
There you go. All right. Well, listen, have a great weekend, everyone. I'm going to wrap up and get out of Dodge here.
Okay, sounds good. Have a good time. Have a great time.
Yeah, have a great weekend, everyone, and looking forward to our anniversary show next week.
Okay, take care. Bye-bye.
All right, take care.
Have a good weekend.
All right, bye-bye.